Hi everyone, please check the pinned comment and let's look at my new preferred Elliott Wave scenario on Bitcoin, where I'm looking for a 5-wave move to the downside in a wave A, a 3-wave structure in wave B, and then eventually more downside in a wave C. Now, why did this become my new preferred scenario? It has a couple of reasons. First of all, we have the target box over here between 30.2k and 30.4k that is still not touched. We created another double top at 30k. We have a double top at 30.5k, and usually double tops or bottoms are like a magnet for price, and we have still bullish divergences as well. As you can see over here, price is making a higher low, but on both the yellow and the blue line, price is making a lower low. Now, preferably, we are also going to create bullish divergences over here on the 15, and as it stands now while recording the video, this is not yet the case, so price is making a higher low, but on both the lines, as you can see, there is not a lower low just yet, so we have to wait and see. But this is important for me on why I might prefer another move to the upside to grab the liquidity that is over here for then a move to the downside. Now, if we zoom into this structure, we then have a 3-wave move in wave W, then we have a complex structure in this blue wave X for then eventually another wave Y to the upside, which then finishes the green B. And if we look at the targets for this blue wave Y, in this then being a WXY, currently as it stands with the low that price has made, the target for wave Y, one of the common targets for wave Y, is the 0.618, which as you can see is in confluence with the target box at 30.2k. It's also above the first double top at 30k and very close to the upper double top as well. Now, the reason why I mentioned this being an A, B, C and not a 1, 2, 3, 4, 5 for a lot more downside is because if price is going to go to the upside once more and gets inside this area, this is a rare target area or a rare area for a wave 2 and much more common for a wave B. In general, the 886 retracement, which is taken from the high to the low, is a very rare area, very rare target for a wave 2, but more common actually for a wave B. So that is something to take into account. Now, if you look at this structure to the downside, we can still find maybe a little bit more downside. We have the golden pocket over here, which basically is between 28.1k and 27.9k. And we also have a little bit of a support resistance area, which is the wide horizontal box between also 28.1k and 27.9k for maybe a bit of support over here. And that would also be nice with the bullish divergences that we already have. We already have bullish divergences. But the golden pocket area is actually very common for a bullish CVD bounce eventually to the upside. But then again, I would like to see very, very local divergences as well, because of course, bearish or bullish divergences can also be leading with price just dumping. So I would like to see some local support. If we then zoom into this move to the downside, then what I'm actually looking at is this potentially being a 1, 2, 1, 2, 3, 4, 5. Or so a 1, 2, and then we have another 1, 2, 3, 4, 5, and then another 4, 5. So we could have another low in the making in this particular scenario where we then have a 1, 2, 3, 4, and then eventually a wave 5 to the downside to hit that area that I just spoke about, the golden pocket and the support area, for then potentially a bounce. Now, what I would then like to see is price to create a move to the upside, like some sort of a structure, right? A structure to the upside, then eventually see a bit of a move down, create some very local bullish CVD divergences. That would be nice as some extra confluence for then a potential, that is of course a potential, it's educational trading scenario, where we're then going to trade this to the upside where the target will be the double top and the target box over here, the blue target box, right? So we have to wait and see what happens on the lower time frames, but this is something that I would be looking for or that could be interesting. Of course, every trading setup I show in any video is educational. You guys know that we are on YouTube and I'm not a financial advisor, just showing my insights, because we also have a potential trading setup over here based on Elliott Waves, where if this is a 5-wave move to the downside in then an A, B, C structure, you do not want to see the corrective move of a wave B go above the high at 31k. That is a very, very, very clear invalidation for then a short entry at the target box, stop loss above at the invalidation, and then continuing a move to the downside in then potentially a wave C. If we then go to my two alternative scenarios, which I think are important to mention because these alternative scenarios also show why they are alternatives and why the other scenario now is my preferred one. So the reason this became an alternative scenario is because of this wave X compared to then potentially this wave Y. So over here, what you see is we have basically a 5-wave move down and then an A or 1, then we have a B or 2, and then eventually already going to the downside, because in this scenario, the wave B or wave 2 is already finished in a W, X, and then a wave Y. So this is already finished and we expect a lot more downside to come. In this particular scenario, you can see that this wave Y is very, very long in time compared to a relatively vertical and short wave W, as well as a relatively short wave X over here. And this already made me think, first of all, because usually wave Y and wave W have some sort of a one-to-one relationship, not only in the price move, but also in the time. While wave X can be very random. It can be very long, can be very short, can be anything usually. And also this wave Y did not close above a wave W, and that is something I usually do like to see, where we have some sort of a ranging structure in then wave W, X, and then wave Y ending above wave W, which did not happen in this scenario, because as you can see, if this is the high of wave W, we have a high over here, another high over here, but this is all just creating double tops, right? There's no high that has been taken, at least W has not yet been taken. So this is an important reason why this scenario now became an alternative. And the final scenario I like to show you is where we could get a potential expanding flat, where this is then a 3-wave A. So this can be a 5-wave move to the downside in a wave A. That is then a zigzag, so a 5-3-5, you call that an ABC. But there's another ABC in the market, which is a 3-3-5 wave move. You both call these ABCs, but this is a flat and the other is a zigzag. In this scenario, this then has to be some sort of a 3-wave move, followed then by this being an A, a 3-wave B, and then eventually seeing more upside for a wave C towards the target area for the green B. So we then have this as a wave A, a 3-wave in wave B, where the most common target area for a wave B expanding flat is between the 1.236 and the 1.38, which is between 32K and 32.7K, which also includes the 2022 range highs for maybe a bit of a liquidity grab before then a move to the downside. And that is something to look out for in this particular scenario. So with the long setup I've shown earlier, if price is going to continue pushing on higher volume as well to the upside and breaks the resistance that we have in my preferred scenario, then this is the potential next scenario that I would be looking for, where the stop loss in this educational setup obviously should be above, at least somewhere above the 1.618, as this is a rare target area for a wave B, and then eventually trading it to the downside in a very big wave C. The only reason this is mainly an alternative scenario is that it is very difficult to count a 3-wave structure in this move to the downside. It's much more likely this is a 5-wave structure to the downside instead of a 3-wave structure to the downside, also with the measurements from an Elliott Wave point of view. And because it is more likely at the moment for me, this is a 5-wave structure, the invalidation for a 5-wave structure is the high. So therefore, this is an alternative. If this is a 3-wave structure, yeah, we could get a 3-wave up and then 5 waves down. But in a 5-3-5, you do not want to see the high here being taken. So basically, because this looks like a 5-wave structure, this is an alternative scenario for me. Now, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing. And I will see you at my next video at 7 a.m. tomorrow morning, Central East European time, because it is the birthday of my fiance and we will be out for the night. So thanks for watching. Bye-bye.